Welcome back to Freedom Finance with Landy, guys. Thanks for rocking with me again on your late Sunday night, guys. This might be a late night edit, but today's video is all about how I got into SCHD after years of not touching the ETF as a pure dividend investors, guys. So we're going to get into why I started and own SCHD now, what stocks I sold to fund the SCHD large purchase, and what is my plan for SCHD going forward, guys. So grab your favorite beverage, your beer. You're like, yo, wine, get that espresso flowing, baby, because you're Italian with Landy this weekend. And let's dive into how I got started and dove in to SCHD. Let's get it. All right, so the first question, guys, obviously I haven't stopped my Vanguard trifecta you betcha investing, which is VYM every week, VOO and VIG every single day. 3 ETFs that I think are propelling my dividend income portfolio, bulletproof in it, growing passive income and producing passive income, guys. That's not stopping. But how did I get into SCHD? Obviously, I've known SCHD for the better part of a decade, guys. Obviously, since COVID, SCHD has been, at the forefront of all dividend investors' minds. But, it's actually funny because SCHD is slightly running out of flavor because the last two and a half years, the performance has not been that great. Check the stock, performance if you don't believe me, guys. VYM is actually now performing SCHD over the last 5 years. Rewind back a few years ago, that was always what was said about why I invest in VYM when SCHD outperforms it. Well, what goes around comes around, brother. But wait, I just started buying SCHD, so we'll get into that. So the why. Why did I start getting into SCHD? So I've been investing for over 15, 16 years, guys, and I'm on that pursuit of financial freedom earlier, to have work optional and to just be able to own my time earlier, guys. I'm in my later 30s and I want to get there a little bit faster. Now, my overall dividend yield on the portfolio was just a smidge over 3%, and my dividend growth rate was hovering near 5.5%. So I wanted to, exit some stocks that didn't really have, when you add in the yield plus the growth rate, I call that the compound factor. If they're not 9% or more, I was trying to look at, which stocks do I own not that much of that I'd like to exit that really don't fit the bill anymore, guys. So I wanted to add more income and grow my income better, essentially. I wanted my portfolio to be more efficient, selling some stocks, adding better yield, and better dividend growth. Now, granted, again, I do VYM. VYM is just about at that 3% yield, 6 to 7% growth rate. Love it, meets it, it's great. I'm totally down for it. But I need a little bit more income now. I want to get to financial freedom just a little bit faster without sacrificing too much on possible long-term performance, especially dividend growth as well, because I could chase high yield right now and call it a day. But am I sacrificing and eroding portfolio value and future growth? More than likely. So I wanted to add a better yield and better dividend growth. And that's really where SCHD fit the bill. At the time that I started looking at SCHD, they were in the 25 range, yielding well over actually 4%. And the growth rate's been, some metrics say 8%, some say 11%, some say even 13% on the dividend growth front. So it satisfied both that criteria, guys. So that's the why. Wanted more yield and better growth now and in the future. So that is why SCHD fit the bill. Now, how did I fund SCHD? Because I'm already doing 300 a week in a VYM, 60 a day in a VOO, and 50 a day in a VIG. And I don't want a small position. In fact, I wanted to sell some small positions and just pretty much that didn't meet my metrics and throw that right into SCHD. And we did just that over the last handful of weeks, guys. The party really started, I sold my Hormels. We're going to go through the stock sales right now. We're just going into it, guys. So grab your seat, grab your beverage. Let's dive in here, guys. I sold Hormel HRL. My wife, we sold her Hormel HRL. In total, that was about $4,400. The yield was about 3.8%. The dividend growth, though, was barely over 2.5%. And it just has been a dog lately, and things didn't look great in the future either. So sold Hormel, again, $4,400 right there. And then I personally sold my Diageo DEO position. That was about $1,800. Again, the yield was great at over 3%. And then the dividend growth, though they pay semi-annually, it's over 5%. I was like, you know what? I can do better. Let's slim it down. I had no plans to add to it anymore. You know, the liquor companies, you know, check out Brown, Forman, have not been performing well. So I wanted to take this as an opportunity to just simply exit my Diageo DEO position. That was $1,800. So we're already over, gosh, $6,200 of capital available. My wife had Master Brands Company, a spinoff from Fortune Brands. She had a few $100, like $300. So we sold that. That had no dividend. So again, we're already up to $6,500 in capital. My wife, we sold her small The Gap, yes, the brand The Gap positions. She had about $1,100. Sold that near a high at around a lately high, I guess, at about $26, $27 per share. I think they're around $21, $22 now. But you know, brought in $1,100 of capital. So that's $7,600 of capital that we were able to already plow into SCHD. And then her and I both exited the NetApp company, ticker symbol NTAP, N as in Nancy. They're in the AI storage space. And, you know, we had small positions. She had $338. I had $457. So combined, rounded, close to $800, guys. And that's what brought us almost $8,500. Again, just $8,467 to be exact, that we were able to use that capital. And pretty much at each sale, it went right into Schwab's SCHD. You know, again, the $8,400 produced a 3.34% yield, a $282 in dividend income. But we went right into SCHD, which was yielding well over 4%. You know, again, adding 20% more income, which is about $50 to $60 in additional income just from those sales. So we sold and exited Hormel, Master Brands, The Gap, NetApp, and Diageo. We exited 5 stock positions to fund the SCHD position. So we made a big splash between my wife and my taxable stock account, guys. Cleaning up the portfolio, simplifying it, getting rid of some low to no yielders or low to no dividend growth rate stocks, guys. Added more income and added better dividend growth overall, as well as in a tax efficient manner, because pretty sure we were in a net realized loss long term on those, so I'll be able to get some tax benefits as well. But now, what's my plan with SCHD? Again, I'm diving right into it. I'm giving it to you guys. I'm figuring out ways to find extra cash, whether that's cash back from the credit card, whether that's my eBay Mercari side hustle sales, whether that's scanning my receipts and withdrawing $5, $10 on those apps. We're doing $55 a day into SCHD in my taxable account, guys. You know, really trying to build it. Right now we're sitting at over 400 shares combined of SCHD. So that's the plan going forward, as I'm trying to add more income and right size the dividend growth metric, trying to get closer to a 9 to 10% overall on the overall stock portfolio, guys. So there's my why. More income, more dividend growth, cleaning up the portfolio, 5 stocks already gone, and $55 a day going forward. The goal is financial freedom. The goal is adding passive income. And that's exactly what we're doing here on Freedom Finance, guys. So what do you think of those moves? Would you have done the same? What moves have you been making to clean up the portfolio, align it with your goals and strategy, and making it the most efficient stock portfolio that you have? Let me know in the comments, guys. Subscribe to the channel, and I will catch you on the next one.